All right, we are live. Good morning, traders. Let's get things rolling. It's what do we got? Tuesday, April 28th on MNQ, NASDAQ futures, micros. Interesting day, and already so far, interesting week. We got 13 minutes until the opening bell. I guess time to get some thoughts together on the charts, on the markets. So let's switch over to this screen. You know, ultimately, like if we look at the 4-hour chart, the one thing that I think so many people mess up with all-time highs is, and this is my third time I've traded all-time highs, is all-time highs beget new all-time highs until they don't. And so no matter how much liquidity is building below on sell side, for me personally, I've learned that I do better when I stay with the trend and just keep longing, even though we're way up in premium, and really abide by the trend as your friend until it ends, at least at all-time highs. So that being said, here on the 4-hour chart, you know, we're still bullish on NQ, and we've retraced back down into the 50% level of this range. So that's cool. Doesn't mean we're done going down. No. So here's a tailless candle on the 4-hour. Here's this volume imbalance, fair value gap right down in here. So it could want to come down here still. You know, we have all these relative equal highs up in here. We'll see those better on a lower time frame chart. But going into the 1-hour, let's say, we have, yeah, similar relative equal highs up in here. We've come back down into discount. Still seeing this volume imbalance down in here. I like that. Trading back down to the 50% level of this current dealing range. What else do we got? Lots of SMT down in here. That's what all these little, this indicator is highlighting for me, is all this SMT. But not that this is all it might want to do. If it's really bullish, it only has to come down to doesn't even has to. It kind of would come down to the 50% level and not even come down to the 75% quadrant. I do like this low right there. It's a low inside of a fair value gap. So it's a high probability draw on liquidity. And then we can see the 1-hour created a sell side imbalance above. And then here on the 15-minute, so this is where it gets a little interesting, at least for today. So we have FOMC tomorrow. And what my data shows is that we need to really pay attention to FOMC Monday, Tuesday, Wednesday AMs. Monday is, in my experience, just not worth trading. No setups generally appear, and it's high resistance liquidity runs. Yesterday was a little bit of an exception where an 11 o'clock AM setup showed, and that was it. Now, Tuesday is a higher probability day. That's why I'm sitting here. However, a few things to note. The PM tends to be trash on Tuesday, and in the AM session, we're typically looking for the setup between 9:30 and 9:50. Anytime after that, and it's likely just going to be a high resistance liquidity run. So a shorter session likely today. Now that said, already lower probability conditions today. And what we're seeing here, let me check to see if you can see this. Yeah, the 15-minute time frame since Asia, the Asia high to the current low is, you know, almost 2,000 ticks, almost 500 handles. That's a huge expansion. And what we can see here, make sure you can see that, is that prices almost hit the average daily range already overnight. And that's a big deal because usually when you get that much expansion, nearly an average daily range, usually what happens is New York AM creates the consolidation phase. It does what Asia typically wants to do, Asia and London, create a consolidation phase. So there's a strong possibility that this morning session does nothing and just chops traders up. So I'm keeping that in mind. Here on the 15-minute chart, we can also see we blasted through the 130 ADR. That's typically something I pay attention to. It's why it's highlighted. And then we have targets to buy side. We have the midnight open. We have the new day opening gap. We have London high, Asia high. I don't even have all these highlighted, but I like to just throw these circles on the 15-minute chart so my eye can quickly just see how much I have above or below me. So with this here, I'm expecting a New York low a day profile. It might have been Asia high a day or London high a day, kind of depending on how you want to look at it. London didn't make any meaningful protraction or manipulation. It just kind of continued Asia's trend. So while I'm anticipating New York to be the low of the day, I'm not certain if this is the low or if it wants to make one more low. So that said, I'm pretty much looking for longs. It's cut risk today. And it's one shot, one kill. So we'll see. This expansion here really doesn't, it's a nice looking expansion. And we got a little V-shaped reversal off of it, which is a nice sign, but it doesn't mean it won't start consolidating, because it could be a 15-minute time frame consolidation. So let's zoom in on the 1-minute chart. And we can see here, price already kind of did what I would have wanted it to have done in New York after the open. So we have this new, I think it's a new day opening gap right here. And we can see that price, came back down into it, and it just did a nice consolidation phase, a manipulation of that consolidation phase, and then the reversal. And I would have loved to have seen this in post market open. So that's unfortunate. It formed an inversion right here, it formed a breaker right here. And then here was this data wick high that it took, high probability target. And from here, we don't really have any significant swings. We just have all this inefficiency. There's a couple of equal highs up in here. So yeah, we can see the hourly open at 8 o'clock, accumulation, manipulation, distribution, AMD. What I mean by that is here was an accumulation phase after the candle opened. We can see a manipulation forming possibly a wick on the candle, comes back above open, retests open, and then creates an expansion phase where it's going to eventually accumulate and close again. So that's possible. Oh, here's the 9 o'clock open. So I already did it. So expanded, retraced, accumulated. So what can we expect post 9:30? Well, I think for me, about the biggest thing I would be interested in seeing, and I don't know if we'll get it or not, is I would like to see 9:30 sell off and take this low. I'm not certain we'll see that, because I think it's possible we just end up in this range here. But we'll see. We'll see what happens. All right, so we got, 6 minutes until open. We have these red dotted lines, equal highs, and it's this equal high indicator right there. See if it shows. I forget who it's by. Let's see here. Out of options right there. So we have all these equal highs here on the 1 minute. Looks like the assets are currently in sync. We have ES over here, kind of formed the same low. YM formed the same low down in here, but YM's at the midnight open. So YM's currently more bullish. Ooh, but YM doesn't look great. Let's flip over here on the 4-hour chart. Look at YM just consolidating. So that's not as helpful, but ES is. ES, NQ are in sync. YM is the lagging asset. It hasn't taken its all-time high yet. So we have these gaps above on the 4 hour. There's a slight volume imbalance, slight, like I don't count that as a tail. All right, we got 3 minutes until open. So the 1 hour formed a C2 candle. We can see it took this candle's low, formed a nice tail, and then closed back up in this side, this previous candle's range. So there's a C2, 1 hour C2 right there. So this could be New York low of the day. We'll see. And let's even just pop up. So here's looking at the weekly. We can see yesterday, here's the weekly 12 a.m. We took the previous week's high. And if we look at the weekly chart, we can see that there's this open inefficiency still kind of forming below. On the weekly chart, we traded back down into the 75% level. Let's see if I can get this any more accurate. Right there, didn't quite trade down in the 50% level. So the question is it going to leave an open gap like right here, or is it going to trade back in and fill in this gap, potentially even coming and retesting this current fair value gap? So either, I'm good with either, because it took, so here's, external range of liquidity. Price typically takes external and retraces to internal. Cool, we know that pattern. But the question is, how far up does it go? These are weekly candles here, so it could shoot up for another few days before deciding to come back down, retest either this gap or this breakaway gap, and then continuing on higher. So that's unknown. Given that we just broke all-time high with this weekly candle, I'd probably expect another candle or two before an internal retracement, but it could do either. And that stemmed from, we got 1 minute till open, so I'm going to get back over to the 1 minute chart. Let's see what it does. 42 seconds. Oh, look at that. So we got some movement pre 930. How big is this candle? It's already 200 tick candle. That's not off. It's pre 930. 12 seconds. So we can see price manipulated right here at this low. Oops, didn't want to delete that, want to delete that. Here we go. So we do have bearish SMT up here at these highs. And it looks like, it could close and form some kind of breaker. Jeez, look at that. So if I were to want to short here, I would set a limit order somewhere up in here. There's pretty much no marketing in on that big of a candle. It already took even this, internal liquidity right there, but I'm not interested in shorts. So here it would have tapped you in on that limit order. I would have had TP at 1R. And once it TPs, you go break even, or TP1, that's how I do it. So TP1 would have been hit, and I would have gone break even. but I'm not interested in shorts. We do have a 15-minute gap. We do have bullish SMT. So get that out of my way. I don't really like this liquidity up in here. Let's just even kind of get some size figured out real quick. We're doing cut risk right now. And I'm also not copy trading this. So we have 19 seconds. I don't like, there's just not enough liquidity. It already swept it. That's a nice reaction. It's a nice V shape. It would make sense for price to continue up and do a little more rebalancing. That 15 minutes got a beautiful rejection block. It doesn't look like it wants to consolidate. This trade just doesn't have, I mean, sort of equal highs, not really. It's just no clear swings up in here. But we have equal highs above. We have a first presented fair value gap here. So then the 30-second chart here hasn't even confirmed the inversion. Let's look for that. No tail on this candle. Tough call, because this is definitely a borderline A-, B+ setup in lower probability conditions. All right, so here we go. This 30 seconds going to close above. Which it looks like that 1 minute did confirm, so that would have probably have been the play right there. I might be missing it. This 30 seconds going to expand. Here's this breaker. So my guess is this is the direction for the day. Here was the 9:30 manipulation. It actually formed a nice V shape. And for me, that was the entry. I just wasn't confident at all that there was enough liquidity above for it to continue. I could still enter on the breaker. But at that point, I'm making it a little even more risky because this high right here is so close. YM is just looking like trash. ES. floating upwards. NQ is actually relatively clean looking, which is quite surprising. So we do have this 5-minute inversion here. This candle right here is really nice looking. But I don't like how it's consolidating right here. Probably missed it. I didn't have confidence in the long because this candle swept this high without leaving much else over here other than just empty inefficiencies. And that's okay too. So I would have targeted 2.5. So I'd have been out of the trade already. So just kind of flipping around on the time frames here, seeing what I see. Yeah, man. If this would have been a lower low, I would have been so into that trade. But what we can see here is that already price is kind of chopping around. And that's what I said was characteristic for FOMC. Tuesday mornings is somewhere around 950, which right now it's 941. It can tend to do some high resistance liquidity run, which pretty much looks like this. Maybe it's bullish or maybe it's sideways. It's just as super whipsaw back and forth. We can see that in the wicks and tails on these candles. But it looks like price wants to push up, so Never closed above that 5-minute gap. Or it will now probably, but at least this candle didn't. So be it. That's how it goes sometimes. So like I was saying earlier, if 930 would have swept this low, it would have been much nicer. We could have had more internal liquidity target. It would have made that A+. And all I'm doing here is I'm just double checking. Sometimes I like to look back, not out of a place of, how to say, wanting to be hard on myself. More so just out of a curiosity and a learning place. Like, did I miss something that would have changed my perception on that trade in hindsight? In this case, I'm not really seeing it. Maybe on the 5-minute chart will look a little clearer. You know, other than all this liquidity up in here, which I already knew about, it was just so far away from here. And because this very well could have been a, you know, like I said, there was also some targets down in here I was interested in seeing. This could have been a stop hunt. This could have been the manipulation, could have retraced back up for further, you know, let me just draw it out. Like, so here was the stop hunt and then closed below this in the like I outlined that short position. This is a retrace back up for then further downside delivery to those other targets. So I really didn't like to see that. And that alone, for me, took this trade from high A grade to questionably B grade, which I don't take. Yeah. This was definitely, and who knows, maybe some of my mentors took it. All right, so it didn't look like, I don't see any, I only see one post. Let's check it out real quick. I want to show you this. So Ryan, I take a lot from him. I don't really consider him my mentor, but I also pay attention to his trades. So he called this the top 3 pattern trade of all time. So he too was seeing it more as a pattern trade. And then here was that trade that I mentioned earlier that happened pre-market. So yeah, I guess I think that's probably it. I'm not seeing any possibility for a long setup for me that I'm going to be into. Trying to figure out if it's worth waiting for another few minutes. Because my cutoff time is technically right about now. I look for the 930 macro. Here was the setup. And then, but one thing that's got me interested is price is actually moving, at least on NQ, which is quite interesting. but I'm just not going to have a long setup in the amount of time that I have left, according to my rules. And it's important to have your rules, and it takes years to build them, and then you got to stick to them. You got to gather the data and adhere to them. Like my data shows me that after 9:45-ish, there is, even if today's an exception, there is a much higher probability for consolidation after that. And we can even kind of see it already a little bit. Like, look at how 9:30 created this little bit of an expansion, then 1, 2, 3, 4 minutes of consolidation, expansion, 1, 2, 3. And it's just not 9:30. 9:30 usually from 9:30 to 9:50 when it's distributing, it doesn't really do this frequently. So and that's one of the big things that's really helped me push my win rate up, is the idea that, a strategy could be potentially an 80% win rate strategy for a person. So then why is it, if that's your mentor's win rate, let's say, which that's what Ryan Dodgy claims, 80% win rate. One of my other mentors, he claims about a 70% win rate. So let's even just run with that, his 70% win rate. So if he has a 70% win rate, and then you're sitting there trading the exact same thing, you're trading their model, you look at the charts the same with the same concepts, ICT concepts, for example. Why is your win rate 40%? The reality is it's not the model and not even the reading of the markets that's so much the edge. The edge is in between the model and the trade outcome. And that's inclusive of all of your rules, your criteria, and your trade management system, emotional management system, all these kinds of things. And that's one of the things I've been focusing on a ton this year. And it's really helped me out, because last November, I think it was, or a little bit October, I forget, somewhere in the fall, I remember having one of those months where, I was following my mentor, one of my mentors, and he was my mentor for pretty much all of last year. And he had like a $20,000 month. And I wondered, well, what gives? Like, I didn't make anything this month. And in fact, I probably struggled pretty bad. Why did he make 20,000? We tried to take the same setups. We looked at the charts the same, and we very much so do. Like, I noticed when I was on his streams, like our biases were pretty much similar. Let's call it 90% of the days. So why then was there such a big discrepancy? And that's when I realized it was everything between the model and the execution. And there's a lot to say about that, so I'm not really going to add it in right here. I'll start sprinkling some more of that stuff in and talking about it more in my other videos, both the recorded videos and in these lives. But I'm really excited to share it, because it's like, for example, I think in February I had a 22% win rate. So that was by far the worst month I've ever had. Prior to that, maybe I was more down in like the 45% win rate kind of thing. And then February plummeted to 22%, even a little lower. I think it was 21 point something. I'd never even seen a month that bad. And then I made some changes between the model and the outcome, like I was talking about. And I ended up pushing my win rate from 22% to 80% for March. So big changes. Currently, my win rate for this month is right around 67%, still very healthy. And I'm really excited to start sharing some more of that. So I don't think the market's going to do anything I'm interested in at 7 or 9:50 New York time. So I think that's good for me for FOMC Tuesday. And I'm gonna end the stream.